Today we will do Basu Nayak problem number 31. Basu Nayak problem number 31. First read the question, that is Mr. Rajdeep owners of two houses, the particulars of which for the year ended 31st March 2023. Now we are doing for previous year 2023 are as follows. Now there are two houses. House 1, construction completed is given in the question, but for our HS syllabus this is not important. How to use? First house is let out for residence, so this is a let out house. And house 2, it has two parts. 3/4 part of that house is self occupied and 1/4 of the let out, both for residence. That means these are all for residence. If self occupied for business hota, in that case we will not take in this house into the consideration, and 1/4 is let out for residence. Now what are the other informations given? That is municipal tax paid for house 1 25,000, for house 2 22,000, and it is given in the bracket that is assessed at the rate of 10% on municipal value. That means municipal value is not given in the question. We have to ascertain from this information the municipal value of the house, and where the house is situated, that is also not given in that question. That means we will assume that house is situated other than metro cities. Okay. Rent received 3,60,000, and for house 2 60,000. 60,000 means for 1/4 part. Insurance premium is not required. Interest on loan for house 1 37,000, and for house 2 48,000. Land revenue is also not given. Compute total income from house properties of Mr. Rajdeep for the assessment year 2023-24. Now come to the answer. On heading, you have to write computation of income from house property of Mr. Rajdeep, a resident individual, for the assessment year. Here you have to write your relevant assessment year. For you, the assessment year is 2023-24, and relating to the previous year, previous year is 2022-23. Now house 1 is let out. House 1 is let out. So first we compute the income from house property. If house is more than 1, in that case you have to draw 3 columns for amount. Now house 1 let out. First you require gross municipal value. This is not given in the question, but there is information regarding this. From there you can ascertain the gross municipal value. Now here this is the working spot. Gross municipal value for house 1. Now it is given in the question, that is municipal tax is 25,000 for house 1 and 10% assessed on municipal value. So the computation method is, that is 25,000 the amount of municipal tax divided by 10%, because 10% is the rate of percentage, and municipal value, if we assume 100%, in that case 100% is 2,50,000. We have already computed house 2 gross municipal value also. In the question it is given 22,000 is the municipal tax assessed at the rate of 10% on municipal value. So municipal value is 100% and it is calculated as 2,20,000. Now house 2 has two parts. 1/4 is let out and 3/4 is self occupied. And for the self occupied, municipal value is not required. But for the let out portion, municipal value is required. So here I have computed for let out portion, municipal value will be 2,20,000 into 1/4, that is 55,000 is the municipal value of the let out property. Now here gross municipal value is 2,50,000 annual rent, that is rent received given in the question, and there is no vacancy period, so annual rent is 3,60,000, just given in the question. Now reasonable expected rent is the higher of these two, and that is the gross annual value, because there is no other information about fair rent or standard rent. So this higher of these two is the gross annual value. From here you have to deduct municipal tax 25,000. Nothing is mentioned whether municipal tax is paid or paid by the tenant or owner. So we have to assume that municipal tax is paid by the owner and the whole amount is deductible. After deducting this from gross annual value, we get net annual value 3,35,000. Now deduction under section 24. Two deductions are there. One, clause A, standard deduction, which is 30% of net annual value. Now here net annual value is 3,35,000 and 30% of that is 1,05,000. This is the deduction under section 24. And interest on loan is given in the question 37,000. And we know that in case of let out property, there is no maximum limit of interest on loan. So full amount is deductible. So total deduction is addition or summation of these two. That is 1,37,500. And total deduction is deducted from this net annual value, and we get income from first house, that is 1,97,500. Now come to the house 2. House 2, that has two parts. We already mentioned that. First we come to the 1/4 let out part. Here already we have calculated gross municipal value, that is 55,000. Now 55,000 and annual rent received is given 60,000. Rent received is given 60,000, and this property also has no vacancy. So rent received is annual rent. Comparing these two, we get gross annual value, that is higher of the above two, 60,000. From here we have to deduct municipal tax. Now municipal tax for the entire house is 22,000, but we are computing income for the 1/4 portion. So municipal tax is 1/4 of total tax, total municipal tax, that is 5,500, and 5,500 deducted from the gross annual value, net annual value came to 54,500. From here there are two deduction under section 24. Standard deduction, that is at the rate of 30% on NAV, that is 16,350, matlab 54,500, 30% on 54,500, that is 16,350. And interest on loan given in the question is 48,000 for the entire house. You have to calculate 1/4 part. So 1/4 of 48,000, that is 12,000. Let out part, so total amount is deductible 12,000. Total deduction is addition or summation of these two, that come to 28,350, and this 28,350 is deducted from net annual value, and income from the 1/4 of part of the second house is 26,150. Now this page is over, so I have added this house, income from first house and income from 1/4 house. Total is 2,23,650. It is brought forward in the second page, that is 2,23,650. Now house 2, that is 3/4 self-occupied. We know that house 2 has 2/4. Already we have computed 1/4 part which is let out. Now we have to compute 3/4 part which is self-occupied. We know in case of self-occupied property, annual value under section 23 subsection 2 is nil, and here only one deduction is available. No municipal tax is deductible, no other deduction is there, only one deduction, that is interest on loan under section 24 clause B. Total interest on loan given in the question 48,000, of which 3/4 part is for this portion, self-occupied portion. So 36,000 is the amount of interest on loan. It is a self-occupied house property. Here it is not mentioned whether the maximum limit, it is not mentioned that when loan is taken or for what reason loan is taken. So we have to assume that loan is taken after 1499 and for repair and for construction and acquisition purpose. So entire amount is deductible, 36,000. There will be no maximum limit. And from zero, nil matlab zero, from zero we are deducting this 36,000. So income from the 3/4 part of the second house is negative 36,000, which I denote in bracket. You can give minus sign also. Now this is the income from the first two part, first house and first part of the second house, and this is the loss. So after deducting this loss from this income, we get the income from the house property, that is 1,87,650. From this 2,23,650 we are deducting 36,000 and it came to 1,87,650.